Thanks for joining us this Monday. We have Frank Holmes on the line with us now. Frank, good to see you again.
It's good to be back.
And Frank, we're starting the week with gold at a 4-week high. Can gold continue its uptrend with a stronger U.S. dollar and weaker oil prices?
Well, our thesis and theme for 2015 is bad news is good news. And whenever we have any sort of economic imbalances, and right now the great fear is not inflation, but deflation. Deflation out of Europe, deflation with the price of oil falling, and that's causing all of a sudden gold to rally because governments will respond with excessive printing of money.
Also, the 10-year Treasury continued its fall below 2% this Monday. Frank, how much of that is having a pull on gold?
Well, the 10-year government bond is really a reflection of inflation, deflation expectations. And everyone was looking for a massive economic boom, but the bonds are falling because they're looking out 6 months and saying the risk today is deflation.
All right, let's get to our opportunities and threats segment now, the OT segment of the show. Let's start with opportunities, and we've been looking at how gold has been underperforming in U.S. dollar terms, but it has been doing well in euro terms and notably the South African rand, and that's where many of the gold producers are based. Could this, Frank, help boost the mining sector in the region, which has been facing a supply crunch and rising costs?
Absolutely, and that's the real magic now. If you look at Barrick and Newmont, big producers in the U.S. versus Goldfields or Harmony, strong currency versus weak currency, those countries where a commodity is produced, which is experiencing a declining currency value versus the dollar, there is an inverse relationship, and that means margin expansion. South African gold companies are witnessing a 40% expansion in profit margin. A year ago, they're making no money. Now they're making money because gold is basically flat, but the currency has fallen dramatically. You can see this in Latin America. In the peso in Colombia is off 20%. Canadian dollar is off over 12%. So Canadian gold producers will have a margin expansion, which is truly critical for these gold stocks to have any rally that's sustainable.
And what about what you mentioned in your morning commentary, Frank, that lower oil prices means lower costs for mining companies? Is this a positive for gold?
Another bonus. Another super bonus for those companies that are using a lot of diesel fuel. Rand Gold in West Africa, currencies are devalued there. Their costs are quite often in the euro and cost of diesel. So guess what? The euro is falling. Diesel prices are falling, but the price of gold in U.S. dollar terms is resilient. So therefore, they have margin expansion, and they have one of the highest returns in capital of all senior gold producers in the world.
All right, on to threats now, Frank. The U.S. dollar is still clearly in the lead. Do you see the strong U.S. dollar hurting gold prices or even U.S. mining companies?
I think that producers that predominantly all their expenses are in U.S. dollars will have the greatest difficulty with any type of a strong dollar. But I think some of these, we're going to see supply contracting this year from the gold mining companies, and I think you're still going to see stronger demand. And what I'm really hoping for, and I think is going to happen, is this drop in oil prices, as I've mentioned before, as more than $1 billion a day tax benefit to many of the emerging countries. So in 6 months from now, we should start to see that trickle down into India, in Vietnam, Thailand, Indonesia, and these countries, and Africa. So they'll have a big benefit of cheaper energy prices, which they'll spend on other things, which is great for the love trade.
And speaking of Asia, Frank, one bank, Barclays, expects gold prices to decline in 2015 despite strong physical demand coming out of Asia.
Well, that's their opinion, and we'll let them have it.
All right, Frank, wrapping it up now. We have CPI, we have retail sales this week. What's gold's touchdown pass?
What I'm looking for is a gold to continue, and I think some of these gold stocks are going to start getting traction as people witness Goldfields just being on a tear. And Harmony last week, Harmony and Goldfields were up like 20 and 30%. That's significant. That's like going back to 2003 and 4. So I think that we're going to start seeing analysts reassessing the currency impact on the costs and their lower oil prices, which gold mining companies will do the best. And I think you'll get a re-rating in the Kinross's, you'll get a re-rating in the Yamanas, which is all bullish.
Thanks so much for your thoughts today, Frank. We'll see you next week, and we'll see you tomorrow for a brand new Kitco News segment. Thanks for watching.